Hello traders, and welcome to another video review. Today is Monday, November 27th, 2023. Let's take a look at the economic calendar for today. So what do we have here? The first thing is that there are two very important events scheduled for release at 2 o'clock and 4 o'clock. One of those is the building permits. This data is from the USA, and the other one is new home sales. This one is from the US as well. So two very important events. If you want to take a look if there are any other very important events, so you can see the medium ones, and as you can see, there isn't that much here during the whole day, because it is that we got only some speeches from Buba Balz and the ECB President Lagarde, and then of course plenty of the speculative positions data are scheduled for release. So generally two very important data releases from the US, so we'll definitely take a look at the US dollar and S&P 500, but first let's take a look at the euro dollar 4-hour chart. The euro dollar 4-hour chart is showing us the strength of the euro, which is again going up and testing the recent swing high, almost testing the recent swing high, and 61% of the Fibonacci retracement of the last wave down. This level is located at 1.0964, and this is exactly where we hit the last candle. So we hit this level here. The thick black line is telling us that this is the 61% of the Fibonacci retracement. Local highs were done a little bit higher, 1.0966, but generally there is no candle close above the 61% Fibonacci retracement level, and as you can see, we went as low as 1.0854. If the last 4-hour candle will close like this, we will have some sort of the pin bar candle. It looks almost like a doji, which means that the upside is being actively denied for the bulls. And of course, after the test of the 50 periods moving average, the market might be ready to go a little bit lower. Nevertheless, the whole outlook for the euro dollar is still bullish. As you can see, we got this very nice local uptrend still developing on a 4-hour chart. Nevertheless, the problem is with the momentum, because the momentum doesn't actually moves in the same direction, which means that the momentum is moving lower. It is moving a little bit ahead of the price again. If we take into the consideration, for example, this high, we can clearly see that the momentum is decreasing, right? So the market cannot go up on a decreasing momentum. So we should expect maybe another test of the 61% of the Fibonacci retracement, maybe some kind of a double top here, and then slight reversal if the bulls, of course, won't break definitely way higher than they are right now, because the current situation, as you can see, it's even deteriorating more, because now the market is now, there you go, now you have the clear rejection of this level. We got the red candle here on a 4-hour chart, so it looks like the market doesn't actually want euro to go any higher. Only some kind of a sustained breakout higher might change the outlook. Maybe the trigger will be the US data, but this data are scheduled for release at least 5 hours from here. So there is still 1 or 2 candles on the 4-hour chart that needs to be done before we will get the other data. S&P 500, 4-hour chart of the S&P 500. Please take a look at this. As you can see here, we are narrowing our very strong rebound towards the level of 4,612. This is the level of the technical resistance, and there is some sort of the, let's say, a zone located here. We are very close to this level. The local, let's say, the local technical support is located here, roughly around 4,539. So this will act as the technical support for the price, and of course we can clearly see that this market movement is way overbought, extremely overbought on the 4-hour chart. Let's just switch to the daily. On the daily is the same situation. Okay, so after the test of this level, we might see some sort of the pullback, some sort of the downside movement to be developed, because it looks like the recent market conditions doesn't actually look that friendly for bulls. We got the breakout, we got the cross of the 50 and 100 periods moving average, which is fine. The market actively jumps from the 50 periods moving average. However, as I said, on the 4-hour chart is so visible that the momentum is now extremely overbought, that some sort of the movement to the downside is really needed. The intraday technical support is 4,525. We might even see the market going lower towards 4,486. So the outlook remains neutral to rather bearish in the near term because of the possibility of the pullback. What is US dollar to Japanese yen doing? As you can see here, we got the breakout to the downside, and we have, of course, this inside of the channel trading, which means that we got the horizontal trading between 150 moving average, between the technical support 148.90 and the technical resistance 149.76. Momentum is hovering around the level of 50 as well, so nothing major is going on here. But if we zoom out and take a big picture, we can see it's clearly that we broke below the short-term trend line, and now after this situation here is resolved, the market might return to the downtrend. This is why we should pay attention to the today's low, even 148.79, just below the range lows. Then there is another technical support located at 148.21, and of course the last technical support located at 147.38 with a local low at 147.13. Of course, if we zoom out, we can clearly see that this increased volatility pattern here might give us some clues about the current situation on the US dollar to Japanese yen, because the market was pushed very strongly down to the level of 147.12. If we take our price range tool, we can see it clearly that few percent was made during this pullback. There you go, 3.13. So that is the biggest correction. Let me just switch to the daily. That's the biggest correction we got since this, and that's the middle of the 2023. This one is actually, let me just take a look, might be a little bit more than 3.3. I guess it will be roughly around 5. There you go, 5.39. So this is still the biggest correction, but this one is not small either. So maybe something is changing, and on a daily time frame chart you can clearly see that the market tried to move back above the level of 50 on the RSI and then failed. So any new low would likely extend the drop even lower towards the extremely oversold market conditions, because there is still a room to the downside, and there's definitely room here on the chart as well. So last but not least, let's take a look what Bitcoin did over the weekend, and you can see that marginal high was made on a daily time frame chart, So that's just from Friday, but let's just switch to the 4-hour chart. Okay, there you go. We keep moving inside a narrow range. The local high and the swing high was made at 38,456. Since then we moved a little bit lower. There is still no decision whether market should go up or down. The market participants still are confused, and the fight between bulls and bears continues. So right now, let me just place the high from the swing high of the 38,456. The outlook remains bullish. However, this movement here is not really impulsive. It looks like a wave 4, to be honest. So when we are done, then the market should resume the uptrend. Sooner or later, this situation will happen on Bitcoin. The rest of the levels is still active, and it's still on this chart. Right now, we can remove this measure here and just leave this chart to see where is the breakout next, to what level. If we will have some candle close above this level of 38,556, or if we will have the candle close below 35,670. Those two levels are right now the most important ones on the 4-hour chart of the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.